Hello, what is going on, traders? In this video, I'm going to give you guys a quick update on US30 from my perspective and see where we can potentially find some good risk reward trading opportunities. So we've been calling US30 price movements quite nicely so far. If you recall, when the market was here consolidating in this monthly range, I projected how the market had a high probability of pushing to the upside to take out the buy side liquidity that was residing above this high before breaking back below. And as you can see, that's exactly what happens. So we had this accumulation, manipulation, distribution setup. So I'm just going to clean my charts momentarily and go to the monthly time frame. Now, what we can identify from a monthly perspective, like I said, we have an accumulation, a manipulation, and a distribution. Now, the market has made a bearish impulsive move to the downside from point A to point B. After the bearish impulsive move, the market has provided us with a retracement to target the internal liquidity before potentially moving lower. Now, what we can also identify from a monthly perspective is the previous monthly candle. Notice how this monthly candle has opened bullish, took out the high of the previous month, okay, and now we should take out the low of the previous month and start to fill in that wick. Now, if we drop down to the weekly time frame, I'm just going to get my drawings back on. Bear with me a second. Okay, so now if we drop to the weekly time frame, what we can identify, since the market made this manipulation, taking out this the buy side liquidity that was residing above that high exactly there, the market has made the bearish impulse to the downside, breaking below multiple levels of structure. So since breaking below multiple levels of structure, the market has provided us with a retracement, as I said, to fill this internal liquidity that we have from point A to point B. We've got this beautiful level of weekly fair value here. The market's made the bearish impulse, made the retracement, and we have filled that imbalance. So what I'm expecting here is basically an impulse correction continuation pattern and the market to be drawn towards this level of weekly imbalance that we have residing below this significant low, which is also below the monthly range accumulation. So now if we drop down to the daily time frame, just before we do, sorry, we've got this weekly supply zone, which is an area of interest to me. Now let's drop down to the daily time frame and see what we can identify from a daily perspective. Okay, so on the daily time frame, if we take our Fibonacci from the high to the low of the bearish impulsive move, what we can identify is the market is testing exactly the golden ratio, the 0.618. So now we're layering confluences on our short setup. We have the golden ratio 0.618. We have weekly bearish order block exactly here. And we also have this area of fair value, bearish fair value gap, as an added confluence. Okay, so we're expecting a continuation to the downside. What we can do if we drop down to the 4-hour time frame, again, is just add some more confluence. So down on the 4-hour time frame, what we can identify, ignore the horizontal lines, they're my zones, right? What we can identify from a 4-hourly perspective, my apologies, guys. My computer just lagged a little bit there. What we can identify from a 4-hourly perspective is that the market has just broken above this descending 4-hourly trend line. What happens to retail traders when you see a break of a descending trend line? Retail traders will trade the breakout, meaning they will buy the retest of the trend line, assuming that the market is about to change direction, right? So because the market has broke out of this descending trend line, this has induced traders long. Where are their stop losses going to be? Their stop losses are going to be exactly below this low. What do we have just below that low? We have an area of 4-hour fair value. What we also have here is the previous week's low. So last week's low, you can see here that the market has just taken out last week's high, the previous week high. Okay, so the market's grabbed liquidity, buy side liquidity residing above the previous week high. Now, like I said, we should be drawn to the liquidity residing below the previous week low. Now, what we can identify as well, like I said, we've got this weekly supply zone, but we want to refine the area, right? We want to try and refine that zone to try and get a nice precise entry. So if you just get rid of that area, you know that we've got supply all across this zone. And what we can spot now is we've got this beautiful level of 4-hour fair value from this candle's wick high right here to this wick low right here, during this impulsive 4-hourly candle to the downside, the market left behind an area of imbalance. Okay, this area of imbalance is just above the high of the previous day that you can see here on the right hand chart. Okay, so basically what I'm looking for here, now bear in mind we have US CPI inflation data in 25 minutes, right? Volatility is expected. What I'm looking for here is a push up into this level. Okay, this is where the weekly supply is, the Fibonacci is, this 4-hour fair value gap is. Okay, so we have a lot of confluence here. So if we just copy and paste this over to the right hand chart, you can see that this is how it looks right here, right? So now we're going to drop down to the intraday timeframes, 15-minute and 30-minute timeframes, to have a look at a potential opportunity. Now we have the stop losses, buy side liquidity residing above the previous day high, exactly here. We have this relative equal high double top, again creating a level of liquidity, and this fair value gap in confluence with a 4-hour zone, purple line, that we have here. So we have a lot of confluence. Okay, what I'm looking for is basically a strong push to the upside to grab all of the liquidity residing above these highs, fill this 4-hourly fair value gap, mitigate the weekly supply zone, and then I will be looking for one of my valid entry confirmations to potentially take this lower. And that's pretty much it from me, guys. I will not be entering or placing any sell limit orders pre-CPI. I will simply be waiting for the data to come out, waiting for the market participants and the market itself to react to the data, and then we will find a valid entry once the market obviously satisfies our lower time frame entry confirmations. If the market, for whatever reason, on the data release, pushes to the upside aggressively, wicks to the downside, okay? Don't FOMO into positions because spreads and slippage will be wide during the data release. Simply wait for the market to settle, and there will definitely be plenty of opportunities to get in a nice swing trading opportunity. I hope you enjoyed the analysis, guys. I'll speak to you all soon.